Technical analysis and understanding different kinds of graphs in stocks. Technical analysis can be divided into three parts. This analysis will basically help you to analyze where the stock price may go. There is famous saying, "Picture speaks thousands words." These are three calculations. 1. Simple moving average, also called as SMA. 2. Moving average convergence divergence, also called MACD. 3. Relative strength index, or RSI. You'll be able to find in any website. I have taken data from STOCKS..com. In below slide we will be discussing them separately. 1. Simple moving average. Simple moving average, or SMA, is simply the moving average of either 20 days, 50 days, or 200 days. When the investment price crosses above and below the SMA, it is signal for either buying or selling. For example, if suppose closing prices over the last 5 trading days were $32, $36, $34, $35 and $31, then the average will be $33.60. Now suppose you do this for continuously for 20 days or 50 days. Then it converts to SMA. You can see this graph in any financial website, but I refer STOCKS.com, since it gives me the SMA for 50 and 200 days also. Buying signal. When the SMA line is moving up, and stock price is going below the line, and moving back up, it signals a buy. Remember the below points. A. There is uptrend established. B. Stock price falls below moving average. C. Buy when price closes above moving average. Selling signal. When the investment is moving down, the SMA acts as resistance line. The price of the stock is moving up, and then going down the line. Signal a sell. Remember the below points. A. Established downturn. B. Stock price falls above moving average. C. Sell when price closes below moving average. Let's take an example of Pfizer, the major manufacturer of COVID vaccine. We will take an example of both buying signal and selling signal. The blue line indicates 50 days SMA. The red line mentions 200 days SMA. And at last green line indicates 20 days SMA. Analyzing the buying signal. Focus on the date between July 6 till August 23. We see that the stock price of Pfizer is continuously rising. That is from $39 around early 50. If we notice here, all three graphs, that is blue, green, and red, are below the price, which indicates that it is buy signal. If we would have bought sometime near July 12 at early 40, we would have made profit till August 23. Analyzing the sell signal. Focus on the date between August 23 and late October. We will see the downward trend in the stock price. As well, the stock price is going below green line and blue line. It means it was indicating the sell signal. You can pause here for some time for analyzing the graph. Moving average convergence divergence. That is MACD. This measurement shows trends in an investment by looking at the difference between fast and slow exponential moving averages, or EMA, of its closing prices. An exponential moving average, EMA, is very similar to simple moving average. The only difference is it places more weight on the recent prices instead of the past ones, making it react more quickly to trend changes. As these average comes together and moves apart, they tell about the future buy and sell. Let's take an example of Pfizer again to explain, since this is best example of up and down which have happened in last couple of months. There are three components in the above picture. MACD, which is black line, the difference between 12-period exponential moving average and 26-period exponential moving average. Basically the difference between the fast and slow. The period can be hours, days, weeks, months. But generally we take in days, and that is what have been discussed here also. MACD signal line, which is red line, the 9-period exponential moving average of the MACD. Generally it is taken as 9. And here also we have taken as 9. MACD histogram. This is difference between the MACD, which is black line, and MACD signal line, which is red line. The histogram is commonly known as bar chart. And this shows whether MACD is above, the same as, or below its signal, and by how much. If we observe that whenever the black line and red line intersects, the histogram flips either above or below zero line. Based on histogram flipping, you can decide whether to buy or sell the stock. Anything above zero line indicates the increase in price, and below zero line indicates the dropping of price. Histogram depth of height tells us how stretched the stock price is going. Their move towards the zero line indicates that something is changing, or their crossing over or under zero line shows us a new trend has begun. If histogram is moving up, then it is buy trend. If the histogram is moving down, then it is sell signal. One thing to note here is that any way you choose to follow MACD will have you missing the very tops and bottoms of the price line, but catching the bulk of the next trend. That is the goal. If you are happy only when catching absolute bottoms and absolute tops, you will rarely be happy. Relative Strength Index, or RSI. So before understanding RSI, let us understand another really easy concept called relative price strength, RPS. In very simple language, this is the relative price difference between the two stocks' price. Basically you are comparing two stocks against each other. Now let us come to relative price index, RSI. It is the same concept like RPS, but the only difference between them is RPS is comparing between two different stock price at same time interval. RSI is comparing the stock price of the same stock but at different interval of time to gauge current strength. By default it is 14-period time frame. But again it can vary by days, hours, weeks. But normally we take days for evaluation. The idea with RSI is that we can know from an investment history when it tends to reverse direction, either up from a low or down from a high. RSI is very easy to understand. It fluctuates between 0 and 100, with reading above 70 indicating overbought and due for fall, and reading under 30 indicating oversold and due for bounce. You are supposed to wait for reversal to happen, either before selling or buying, because you never know how far the move will go before reversing the trend. Let's take an example of Pfizer again. If we see the date range between July 19th till August 23rd, the RSI was above 70. But still the price was increasing. Only after August 23rd, we see the downtrend and the price kept on falling, unless it went back up after November 8th. In between you will see so many fluctuations but nothing was concrete. Let us see all three together about what we can confer from the graphs. 2 of 3 are more than enough to find whether you have to buy, sell or keep the stocks. Below is the overall picture of Pfizer, from date ranging from June 24th till November 8, 2021. Now if you see July 6th, RSI was less than 70, which means that it is not overbought. The SMA was just touching the price of stock. Finally the MACD and MACD signal line have just crossed each other. It just shows that something is happening in the stock side. Now see the timeline of August 1st. The RSI states that it is overbought, but the SMA is showing the price is still rising, and is way above the SMA of 50 and 200 days. Also in the last graph, the black and red line haven't crossed each other. Means that still the price will rise. So in short, the RSI said sell, SMA said don't sell, and MACD said don't sell. Now let's fast forward to August 23 RD. We see that RSI says that Pfizer is just over 70, which means it is overbought, and selling of stock is round the corner. But SMA is saying that the price is still on the rise. On the other hand, MACD and MACD signal line have crossed each other, and bar graph is reversing, which means it is destined to fall. So 2 out of 3 indicators are telling to sell the stock. And that makes sense, because till October 18th, the price kept on falling. After it, the MACD and MACD signal line crossed each other, and bar graph reversed. It is shown in the SMA graph where we see the price started rising, and RSI is 30%, which is lowest, and is destined to bounce back. If you want to again understand the graphs, pause this video here and see the graphs. Always remember, if 2 out of 3 indicators are in favor of buy or sell, let's take the cognizance of it. You will be very lucky if you are able to exactly find when the stock price is about to rise and fall. I normally give myself chance to reverse trend before buying or selling the graph. Till now I am not successful of selling at peak and buying at lowest. Below is the table which I have made, so that you can have a summarized data. I am again attaching the overall screenshot. The end. Thanks for watching and please subscribe my channel.